What are the best stocks I can invest in on the London Stock Exchange? Are there any stocks in particular that have shown signs to be great investments for huge capital gains? Well, yes. In today's video, we'll explore what constituents of the FTSE 250 are the top 5 growth stocks. Welcome to Wise Wealth. All firms on this list are constituents of the FTSE 250, meaning that they're companies listed on the London Stock Exchange with market capitalizations ranking from 101st to 350th. I've already done a top 5 list for the growth stock investments for the FTSE 100 constituents this year, and if you want to watch that, click on the top right hand corner to go there, or if you want to wait until the end of the video, I'll leave a link to that in the description below. Now more than ever, we as investors have been given the opportunity to buy great companies at a discount. Capitalizing on this opportunity gives us a way to easily boost our portfolio's value. With a bit of research and analysis into what's available, we can unearth some potential gems. If you like this type of content, make sure to subscribe to my channel to make sure you don't miss anything, and hit the like button to let me know if you want to see more of this type of content. Now, I must caveat this by saying that this does not constitute personal financial advice for your investment strategy. This is purely for educational purposes, so without further ado, let's get into today's video. First on our list is SSP Group. SSP Group plc is an operator of food and beverage concessions in travel hubs, operating restaurants, bars, cafes, food courts, lounges and stores in a variety of locations such as airports, train stations and motorway service stations. As of this video, they are currently trading at 261 pence. Some of SSP's outlets are operated on behalf of third parties such as Burger King and Starbucks, while others belong to SSP, such as Upper Crust and Ritazza. SSP's operations span 35 countries, 2,800 stores, and have been around for 50 years. They only floated on the London Stock Exchange in 2014. Since their opening, shares have risen 165% before the stock tumbled in the recent downturn. The share value reduction equates to 60%, giving SSP a much more attractive price. Before the fall, the PE ratio was 21 times forecasted earnings, which meant the general consensus was that it was slightly overpriced. I would be cautious about investing immediately, as a looming global recession and continued lockdown could see a sustained reduction in sales. Share prices could drop further, but as we've seen with the historical growth, there is plenty of potential for capital gains with this one. SSP Group also offers a dividend as a bonus. While the yield of 2.21% isn't the highest, as a growth stock, it is a great addition, and from historical dividend payouts, SSP have always recorded a dividend cover of over 2.4. Now, either they'll look to reinvest profits to encourage further growth, or could look to grow this dividend payout in the future. Number 2 on our list is Wizz Air. Wizz Air Holdings plc is a UK-based airline company. The company provides low-cost airline services on short and medium-haul routes across Europe, the Caucasus, and the Middle East. Wizz Air offers over 380 routes from 22 bases, showing that this stock is a well-established airline operating successfully in its market. As of this video, they are currently trading at 2,674 pence. Over the last 3 months, Wizz Air has experienced a share value reduction of over 36%, providing investors with an opportunity to acquire this stock at a sizable discount. Historically, Wizz Air has proven to be a good value growth purchase, as over the last 5 years, the stock has doubled in value. While the airline industry has been hit hard by the latest travel restrictions amid the lockdown, Wizz Air is an established player that has taken steps to mitigate the damage that they will have undoubtedly experienced. With some countries already exploring the next steps on how to reintroduce economic activity, travel will inevitably be resumed and airlines will be back in operation. Once this is in place, Wizz Air's share value will most probably rise. Unlike the others on this list, Wizz Air is truly a growth stock, as it does not provide dividend payouts. In the cases of some growth stocks, profits are reinvested into the company to stimulate further growth, as opposed to generating passive income for investors. Number 3 on the FTSE 250 growth stocks is Unite Group. Unite Group plc is a UK-based developer and operator of student accommodation. The company provides homes for over 50,000 students in approximately 140 properties across the UK. Their portfolio spans over 28 university towns and cities, and as of this video, they are currently trading at 789 pence. Unite has been heavily hit by the recent lockdown restrictions, seeing a reduction in share value of 39% in the last 3 months. Unite has taken some significant steps to mitigate the damage of the COVID outbreak. The firm has offered to forego rent for students who choose to return home for the remainder of the academic year. The estimated cost of this is somewhere between £90 and £125 million. In doing so, they also made the decision to cancel their final dividend. The REIT said the measures will ensure the company retains cash headroom through the remainder of 2020. Up until this point, the REIT was yielding a healthy dividend of 4%. I think that once the academic schedule resumes and the students return to their accommodations, Unite's share price could see a continued growth in the near and long-term future. Number 4 on our list is Pets at Home. Pets at Home is a retailer of pet food, pet products, and other pet-related services. The company is also an operator of an animal veterinary business and pet grooming salons. As of this video, they are currently trading at 253 pence. They did fall to a low of under 240 pence at the beginning of April. However, they have gained some ground since then, and there is still room for potential growth. Historically, Pets at Home has shown some rapid growth in the relatively short space of time. Their stock rose 69% in 1 year. Trading was previously falling consistently. In 2017 to 18, it was one of the most heavily shorted stocks on the London Stock Exchange. However, the introduction of a new CEO and a restructuring of the company has boosted revenues. The animal veterinary segment of the business is considered an essential service and is therefore staying open throughout the COVID lockdown. This gives confidence that the firm will retain a portion of their expected revenues during this time, as opposed to some of their more unfortunate retail colleagues affected heavily by this crisis. Finally, at number 5 on our list is AG Barr. AG Barr plc is a United Kingdom-based soft drink manufacturing company. It's widely known for manufacturing the soft drink Iron Brew, but its subsidiaries include other notable mentions such as Rubicon, Snapple, and more. As of this video, they are currently trading at 493 pence. This is significantly lower than the 52-week high of 980 pence. This well-established company has been around since 1875. This shows the firm has endured some of the most challenging events in history. Depressions, recessions, and both world wars have not derailed this firm. Personally, I will be looking out for this stock. I've recently invested in Coca-Cola, which has already yielded a 15% appreciation on the share value. Consumer-focused stocks in a time like this are not likely to see a significant hit on their earnings like others will, so for that reason, it's on my watch list. So there you have it, 5 top growth stock investments on the FTSE 250 in 2020. Let me know in the comments below if you have investments in any of these companies, or if you think there are any others to include on a list like this. I think the FTSE 250 tends to get overlooked in favour of its older sibling, the FTSE 100. In recent times, the FTSE 250 has actually been shown to outperform, with the mid-market cap firms showing some exciting growth potential. And in the current conditions, some industries look set to grow more than others. I'd be interested to hear what your thoughts on this might be. If you want more info on how to spot these sorts of stocks before they grow massively, check out my video on this. Click on the icon in the top right hand corner to head there, or I'll also leave a link to the video description below. Remember to subscribe to my channel for more content and hit the like button, and until next time, see ya.